What is a hedge? It is a strategy used by investors to limit risk and protect portfolios against potential losses. Think of a hedge like an insurance policy for your investments. It is designed to offset negative price movements in your assets. While no hedge is perfect, the goal is to balance out your portfolio so that if one asset drops, another stays steady. Investors use various tools like diversifying across sectors, buying protective options, or shorting stocks to create this safety net. It is important to distinguish hedging from speculating. Hedging is about protection and stability, while speculating is about chasing higher returns. This chart shows how a hedged portfolio typically experiences lower volatility compared to an unhedged one during market swings. Ultimately, your best hedge is often a simple, long-term plan that you can stick with regardless of market conditions. Thanks for watching. Understanding risk management is key to long-term success. Please consult a professional for your specific needs.